This is an accounting video for Chapter 16-1 Work Papers. I'm on the main page of our Mind tab. I'm going to go to Part 2 to access Chapter 16. Chapter 16 is financial statements and closing entries for a corporation. And then Lesson 16-1 is preparing an income statement. I'll go to the end of lesson review, to work papers, and I'll be completing the work for Work Together. In Work Together, there are 5 steps. On the first step, we have to identify the accounts that are going to be included in the income statement. Now, if you remember from the work that we did in the worksheet, we know that majority of the accounts above income summary are going to be recorded on another financial document. So we'll go ahead and just keep in mind here that everything from income summary up is going to be included in something else. So we will start here at income summary and work our way up. The one account that we will be including in our income statement for this one is going to be our merchandise inventory. And we're going to include the merchandise inventory in the cost of merchandise sold. Then we'll begin to make our way down the rest of the accounts, and we'll find ourselves at sales. Sales discount, and sales returns and allowances are all going to be recorded in that first column under operating revenue. Sales and revenue, as you know, are the same thing. Next thing we've got is we have purchases, purchase discount, and purchase returns and allowances. This is all going to be included in our next column, the cost of merchandise sold. Again, that was purchases, purchase discount, and purchase returns and allowances. Then from there on, we've got our advertising expense is the beginning of our expenses, and we'll list that in our third column. And our third column is operating expenses, just where you'd expect to see expenses listed at. So we'll go down and we'll click that all the way through utilities expense. Now, the last 2 accounts are going to be recorded in the fourth column, and that's federal income tax expense and the interest income. And this is going to be for unrelated to normal operations. That's going to conclude step number 1, where we're recording and identifying those accounts that are going to be listed in the income statement and the ones that are not going to be listed. Next, we'll move on to the next step. On step number 2, we're going to be recording income statement formulas. So we're going to go through and record all of the formulas when we're looking for net sales, net purchases, your gross profit, and the cost of merchandise sold. So the first thing we have to do is the calculations required to determine gross profits are as follows. Determine the order in which these calculations are made. So on our income statement, the first one that we're going to be completing is our net sales. So net sales will come first. Following net sales will be net purchases. Following that, we're going to have cost of merchandise sold. And then finally, we'll end with gross profit. You're going to find that when you look through the online textbook 16-1 Preparing Income Statement. So if you're to check the textbook, you're going to find these. Next, let's go ahead and take care of the formulas for each of these for each of these sections here. So for the first one here, for cost of merchandise sold formula is going to be the beginning merchandise inventory. Next, we're going to be adding in net purchases. Then we'll have the total cost of merchandise available for sale when we've added those two together. And then we're going to subtract from that the ending merchandise inventory. So to get the cost of merchandise sold, we will follow this formula. Next, for the gross profit formula, we're going to take our net sales and subtract that from our cost of merchandise sold. And that would give us our gross profit. Next, we have our net purchases formula. And for this one here, we're going to identify what our purchases are. And we're going to subtract from that our sales discounts. And then also we're going to subtract our sales returns and allowances, which would give us our net purchases. Finally, we have our net sales formula. And to get net sales, we're going to find first our sales, and we're going to subtract our sales discount, and then finally subtract our sales returns and allowances. And these are the formulas you're going to use to find net sales, net purchases, gross profit, and cost of merchandise sold in this order here. Next, we'll go to step 3 to determine gross profit. On step number 3, we're looking to determine the gross profit. Now, in the instructions here, we've got our adjusted trial balance from our worksheet. And then column 1 here gives us a list of titles that we're going to be using for this income statement. Both really helpful. So let's read the instructions. The adjusted trial balance of Superior Corporation for the year ended December 31st of the current year can be found in question assets up above. Prepare the income statement, including a heading up to and including gross profit, and to the current year as 20 the beginning merchandise inventory is $86,789. Now, it's going to be important to know. The valid values for the text entry cells in the first column can be found in column 1. And we saw that there, where they're going to list us those type of titles that we might see. Okay, so to begin with here, let's first record what the company's name is. So we're dealing with Superior Corporation. And this is going to be our income statement. And it's going to be for year ended December 31st, 220 So that will be our title for this income statement. Next up, we're going to go ahead and the first thing we're going to record is this is going to be our operating expenses. And in our operating expenses, we're going to record our sales. We're going to find our sales in that adjusted trial balance. So our sales are, there it is, $505,897.40. Excuse me, that's operating revenue, not expenses. Next up, we are going to subtract our sales from our sales discount. So we'll record less right there, and we're going to find our sales discount. Our sales discount is going to be $1,318.55. And then our sales returns and allowances is going to be $3,153.26. We're going to need to add those two together. So 1,318.55 plus $3,153.26 gives us $471.81. We will then take our sales minus the combination of our sales discount and sales returns and allowances. So $505,897.40 minus $4,471.81 gives us $501,425.59. And this represents our net sales. Next up, we've got our cost of merchandise sold that we'll do. And for the cost of merchandise sold, we're going to find the merchandise inventory for January 1st, 2000. Oops. So it'll be our merchandise inventory at the start of the year. So we're going to find that merchandise inventory in our instructions here. As it says, beginning merchandise inventory is $86,789.15. $86,000. Great. And then we're going to find our purchases for the year. We're going to find our purchases up in our adjusted trial balance. There's purchases, $203,881.01. Next, we're going to go ahead and take purchases and subtract it from our purchase discounts and our purchase returns and allowances. So we need to find the amounts of those. So let's find our purchase discount. $737.71. And then our purchase returns and allowances is going to be $1,196.01. We're going to need to add those two together. So 737.71 plus $1,196.01 equals $1,933.72. We will then subtract our purchases minus the combination of purchase discounts and purchase returns and allowances. And that's going to give us $203,881.01 minus $1,933.72 is going to give us $201,947.29. And this represents our net purchases. So $201,947.29. Next, we're going to go ahead and determine what our total cost of merchandise available for sale is. And to find that, we're going to go ahead and take our merchandise inventory at the start of the year plus our net purchases, and that's going to give us our total cost of merchandise available. So we'll add this $201,947.29 plus $86,789.15 from our merchandise inventory at the start of the year. This is going to be $288,736.44. There that is. Next, we're going to go ahead and take our less merchandise inventory, and we're going to pull this from December 31st, 20 dash. And what we're going to do is, this is going to be in our account. There it is, merchandise inventory. This is our adjusted one, $81,017.26. Then we're going to find the cost of merchandise sold. And we're going to find that by subtracting the total cost of merchandise available for sale minus our merchandise inventory at the end of the year. So $288,736.44 minus our merchandise inventory at the end of the year. So that's going to be minus $81,017.26. And that gives us $207,719.18. Finally, the last thing we're going to find here is our gross profit. And to find our gross profit, we're going to take our net sales minus our cost of merchandise sold, and that will give us our gross profit. So we'll take $501,425.59 minus $207,719.18, which gives us $293,706.41. A lot of work, but please go ahead and pause it and go back if you'd like to go ahead and see that again. And I'm going to be moving on to step number 4. On step number 4, we're going to be completing the income statement. So the last couple things that we have to do are we have to take care of our operating expenses. Then I'll be pulling these numbers from the adjusted trial balance up top, and I'll be placing these numbers for advertising expense all the way to utilities expense in these cells. So then I'm not having to jump back up and forth. I've got the instructions and I'm putting these numbers in. So it's $3,744 for advertising expense. Credit card fees is going to be $5,473.76. Depreciation expense for office equipment is going to be $7,485. The depreciation expense for store equipment is going to be $9,830. Insurance expense is going to be $6,000. Miscellaneous expense is going to be $2,796.03. Payroll tax expense is going to be $14,375.91. Rent expense is going to be $6,720. Salary expense is going to be $131,978.76. Supplies expense for office is going to be $2,860.89. Supplies expense for store is going to be $3,523.33. The uncollectible accounts expense is going to be $2,384.10. And then finally, for utilities expense, it's going to be $3,972.34. When you add all that up, this is going to give you your total operating expenses. And the total number of operating expenses, I've got the total already for us. It's going to be $201,144.12. From there, we're going to get our income from operations. and we are going to be subtracting our gross profit minus our total operating expenses. So $293,706.41 minus our total operating expenses, which are $201,144.12. And that gives us, for our income from operations, so how much money we're earning, $92,562.29. Now we have to list the other revenue. And we're going to list our interest income. Our interest income is going to be found in our adjusted trial balance, and that's going to be $466.20. Then we're going to go ahead and come up with our net income before federal income tax. And we'll do that by adding in our income from other operations and our interest income. So we'll add those two together. And that gives us $93,028.49. Then we're going to take from that our federal income tax expense, or the amount of money that we had set aside for federal income tax. So the federal income tax expense is going to be up in here. And we had scheduled that for $19,879.69. And we will subtract the net income before federal income tax minus how much we had planned, or how much we had planned to spend. And that's going to give us our net income after federal income tax. We'll subtract that from it, minus $19,879.69, which gives us a total of $73,148.80. That takes care of step number 4. I'm going to be moving on to the next step. Step number 5. On the last step for number 5, we're looking at a vertical analysis. So we're going to prepare a vertical analysis of each amount in the fourth column amount. We're going to round calculations to the nearest 10%. So we're trying to find the percent of sales of all of these numbers, of our net sales, of our cost of merchandise sold, of gross profit, of total operating expenses, income operations, all of these things. They're all going to be a percentage of what our net sales are. So I'll be dividing all of these numbers here by our net sales. I'll do the first couple for you here, and then I'll just give you those numbers. So the first one here, we're looking at the percentage of sales of cost of merchandise sold. So I'll take $207,719.18 divided by our net sales, which are $501,425.59. This is going to come out to be 41.4%. I forgot to do this one here first. What is the net sales of net sales? 100%. Now we're doing the cost of merchandise sold. This comes out to be 41.4%. We do not need to round up 4 because it's not that high. We're not going to round it up. Next, we will complete it for our gross profit. So we'll take $293,706.41 divided by $501,425.59. That comes out to be 58.57, We are going to round this up because it is 5 or greater. So in this case here, it's going to be 58.6%. And we'll continue to do it for all of these numbers here. So these numbers are going to be, I'm not going to do the calculations for it, I'll just give you the numbers because I'm going to divide our total operating expenses divided by our net sales, and that comes out to be 40.1%. Income operations divided by net sales gives us 18.5%. Our interest income divided by our net sales gives us 0.1%. Our net income after federal income tax divided by net sales gives us 18.6%. Our less federal income tax expense divided by net sales is going to be 4%. And the net income after federal income tax is going to be 14.6%. And that completes the work together for 16-1, where we are preparing an income statement.